It's a matter of time when the Federal Reserve of the United States, will become more and more powerful. But the question for today is whether the new invention of Mr. Sam Altman, the Worldcoin, the inventor of Sam Altman, that is the inventor of OpenAI, will become a tool interconnected with the government's tools that are designed to bring more power to themselves. So that's the question to ponder for today. Also, we will jump through many cases related to commodities and cryptos, and also the earnings season. So that will be a macro view. So I'm very glad you decided to pop in, and we are starting right now with the new episode of Wall Street Station. So the first element I wanted to just ponder with you is, will Worldcoin become a tool for Fed's evil plans? Worldcoin is the new cryptocurrency that is designed to give possibly the new type of possibilities to human being, to citizens, just in for the scanning the iris. So whenever you scan an iris, you will have possibility to make new type of things related to buying new stuffs and registering at another facilities related to finance or businesses and I think others. So it might be a proxy to the things that may relate to having this citizen powers with you. So with the Worldcoin, maybe there might be some benefits, but there are things that we may consider before possible adoption. So at first, let's have a look at the Worldcoin as a cryptocurrency project centered on creating a global financial network and identity for everybody on Earth. The project rewards users with a crypto token by scanning their eyes, but normally when scanning the eyes, we are literally giving away the most interior privacy, and that might be something that we need to ponder with regulators about. So when the orb will get verified, the uniqueness of the human, it will reward the user with Worldcoin tokens that are supposedly connected with some other possibilities to earn. So that may give you the access to purchases, the transfers, and to other payments. So it might be useless right from then to use smartphones or any other type of the devices that will allow you right now to pay for goods at stores. But when giving out the type of privacy, you will never know whether there won't be another type of things related to the possible breach of your private data. So for instance, when you would like to have the incentives instead of scanning your eyeball, I would at first let's think of what the threats of it may bring. So among recent advantages, I would say among advantages that might be the easiness of use. So whenever you're trying to use your eyeballs to get new goods, you wouldn't really complain about losing your wallet or having forgotten a password or the PIN to your smartphone. So that's one of the advantages. But I would say the possible risks are absolutely outweighing the advantages, and among them there is a fraud. So loss of money through fraud and cybercriminal activities is almost always a constant concern about digital currencies. Also, when scanning your iris, you will definitely suffer from a loss of data privacy. So this kind of proof of your humanness might be very, very breaching, and maybe something as is of a subject of a further risks toward another malwares. So another thing is volatility in exchange rates. So when you are relying on buying the goods or selling them via Worldcoin, it's always a subject of volatility, as we do know that no matter Bitcoin that's already right here on the market through 12 years, and any other altcoin will be prone to even a higher volatility than the orange coin one. So that's why using the Worldcoin might bring some type of risks to the contractors. So also, as we do know, the adoption of digital currency like Worldcoin by a country may entail its inclusion in the country's monetary policies, and very often those interests of many entities are differentiating from each other. That's why it might be difficult to really cooperate together in order to have an access to the same type of goods and possibilities at one jurisdiction as it's on the other. So that's absolutely the one that you need to also think of. Increased criminal activities and money laundering, it's always a thing that touching the space of cryptocurrency. We don't ever know whether someone won't start to sell their identity for money, and even sell their identities to the black market, when the other may suppose that they are not there. There are not the eyeballs, as there might be some of the deep fakes and other threats upon the way we won't even imagine about right now. So like every other digital currency, also cybersecurity threats are a major risk of Worldcoin. The more adoption there is, the stronger the security of a particular cryptocurrency become. So it always depends on the users whether it will become usable and eventually secure its way. If it's based on blockchain, the power of the network is everything in order to remain this tool being useful. So for now, as I have mentioned right here, there are many unknowns, and it will be very difficult for regulators to really approve the type of cryptocurrency upon a way. And with this, our society that is quite technology skeptical, it may take many years, not just a few years, but even over a decade, in order to have some adoption significant, as Bitcoin still haven't had its very wide adoption phase. That's why it may take a very long time for the Worldcoin, unless some of the greatest and biggest companies across the world will start to develop the solutions based on this. But it's still a matter of a question. So if not trust, should we buy? So max circulating supply at the start was at 143 million WLD, you may have purchased this token at Binance, one of the most prominent cryptocurrency exchange, and the actual max circulated supply was 104, which meant that market makers were responsible for nearly 95% of token turnover at the start. So for now, there are many questions, many things that still haven't yet been answered. There are many shady transactions running under the table. So there is one of the points that the borrowed tokens that market makers will have to return at a price determined on the basis of the following formula. So it was $2 plus 4 cents per token. So we don't know, there was a formula, but we didn't know what the X value will be for individual market makers. But it's clear that market makers will want to get a price above $2 to drop as many tokens as the available liquidity allows. That's why when we are right now at the price higher than the $2, it's absolutely the great break-even point for market makers that want to jump at their bags. That's why I would, if speculating, I wouldn't really trust this token. About when speculating, supposedly I would wait for this price action will stabilize and maybe catch up some speculating back right after. But right now, assuming that the market makers and various institutions have already agreed on the prices that we'll strive for, we may expect strong increases despite the rather negative mode, which would start to change over time. In other words, the popularity of the Worldcoin project is closely related to the valuation of the token. So the question is how much different entities care about the rapid success of the project, and if they will support it, it absolutely will give a possible catalyst for this to grow. But right now, the Worldcoin is the only one of the shitcoins, but supported by prominent names. That's why the adoption may bring this cryptocurrency a fame, at least for a moment. As I remember, ChatGPT has become a quickest app in at the sake of adoption. That's why the Mr. Sam Altman may succeed to some extent, even at this case. But definitely there's such type of a solutions on the crypto market already have been let out. That's why it right now needs to bring more impetus in order to spread it all over the globe. So let me know in the comment section below whether you will buy it and what are the reasons you may think of it to buy. So that was about it. Right now we are jumping to macro view. Let's talk about the Bank of Japan. Bank of Japan that lately was one of the bank that was assumed to rise interest rate, but even though inflation is spiking in this cherries blooming country, we still finding out that the governors are trying to ride the wave of this inflation, and the phenomenon that spiked the demand due to this inflation right here, that the market and the country has suffered from deflation throughout many years. That's why the Bank of Japan still hasn't yet take their final stance when these hikes will eventually take place, and the market makers are just trying to watch very diligently whether it will happen this quarter, and if it would, it may bring much more volatility on JPY related currency pairs. That's why I also will watch and will eventually let you know what I think about it. So also inflation expectations for the Bank of Japan are rising, but still the new president, as claimed right here, fits perfectly into Kuroda's shoes, convincing that inflation is temporary. That's why for now we still need to be patient in order to have some shifts in Bank of Japan's policy. But Fed is rising again. So back in previous week, we've seen that the market has assessed that the Bank of United States, I mean the Federal Reserve, Central Bank of United States will raise interest rates by 25 basis points due to proper type of a better with inflation and also better than expected macroeconomic gauges. So Fed raised interest rates right after by 25 basis points, so it hasn't brought any turbulences to the market, and the range is now 5.25-5.5, and it's a absolutely the one of the level that is very high, and taken in consideration the latest 20 years, it's the highest level we've reached. So right now, Powell didn't soften the narrative despite better inflation data for June. The conference was neutral. On the one hand, Powell wasn't suggesting explicitly that the increase will suddenly take place. On the other hand, pointed out that it's possible even in September. That's why you need to have your seatbelts fastened on and just observe the market and the sentiment around the hard data. So if the non-farm payrolls will show some jolts, we may find a possible clue in order to Fed to eventually put their foot off the pedal for good. So what about European Central Bank? It's a ECB certain rates were raised once again, this time by 25 basis points, as the market also expected this one. So of the three meetings, the ECB was by far the most dovish, but the bank won't pay commercial banks interest on reserves held, which is a form of real easing. So what's more, Lagarde spoke very enigmatically about the next moves, while earlier the bank signaled the September increase quite clearly, interestingly. So the market afterwards sees no chance for a rate hike in the US and sees a big one in the Eurozone. But for us, even though the ECB had a kind of a stress test of its banking system, even though when the recession will come over, we still may have cracks put away, as there is a Italy problems, also other like Portugal's and also Greece's problems that are still yet to get fixed, and the ECB cannot raise interest rates too far in order to not really fall those countries apart. So for now, Lagarde is speaking very enigmatically, as I said, but for the future, those interest rate hike may get stopped out, and that's also implied overnight rate and number of hikes expected for now, that it may get one or two higher hikes, more significant high hikes, and right after this, supposedly within third quarter of this year, we may start seeing a plateau in this data, and the consequence globally may be very tough, as this current tightening cycle is definitely stronger than the previous ones. It seems that it will have a stronger impact on the economy. Just look at here. Sorry for the low quality of the chart, but I couldn't get the better one as it was in a report. So Bank of England, this interest rate hike is absolutely the one that is crashing, and even at the double as high position as it was back during 2003-2004. So in terms of EBC, it's absolutely the one that is also at a higher level, and the Fed is slightly bigger than the previous hiking cycle. The rate of a large one hike was back in 2003 or 2004. So right back then we could find that the Fed has really experienced the stress test on the live example, whereas the European Central Bank and Bank of England hasn't had such problems to tackle. That's why this one will be supposedly the one of the unprecedented manner in terms of possible consequences. That's why betting for European stocks right now might be a bit of a risk. So let's jump to earnings that are choking the market. Back in the previous week, we had many of important names being let out their earnings, and for Microsoft, let's talk about higher than expected revenues and profits. Growth in the cloud segment continues to slow, but the company sees stabilization on the horizon and expected further slowdown in revenue growth in Q3 of 2023. Whereas for Intel, that was higher than expected revenues, rebound in PC demand, optimistic for the second half of the year, slower than expected recovery in the data center segment. For Meta Platforms, however, let's look at this one. We had revenue and profits above expectations, ad revenue rebound, user base up 6%, and Metaverse losses expected to increase further. And right, the last one, Alphabet, higher than expected revenues and profits, rebound in advertising revenues and operating margin up by over 100 basic points in February 2023. Increased demand for AI products may lead to further margin improvement in the second half of the year. So by and large, we're gonna find that those names are doing fine, but there is an observed a slowdown in cloud revenue growth, stabilized for Microsoft and Alphabet in Q2 2023. Will it be the same with Amazon AWS? We'll find out on Thursday after the session, so it's very important to watch. This week is absolutely important one and crucial for US 100 and S&P 500. So we had already SoFi that has really been blown out after the earnings data. So on Tuesday we have after close an AMD that will be very important for Nasdaq evaluation. On Wednesday we have PayPal and Shopify and Qualcomm out of the most important ones, and on Thursday we are jumping to Amazon after close and Apple that everyone would watch out there. Also we have a Coinbase and Block. On Friday there is Fubo and Nikola out of the penny stocks right here. So those were the names that I wanted to cover right now. Let's talk about a bit about the events for this week, macroeconomic events. And back on Monday we had GDP growth rate year over year with lower than expected data. The previous was 1.1. but forecast, yes, it was at 0.6%. So it was aligning the forecasts. So even though it dropped, it was as expected. That's why we haven't seen a jolt on the market, European market, too much. ISM manufacturing PMI are yet to been delivered from US today. RBA interest rate decision was at 4.1, so it is unchanged, and it's shocking in terms of that the RBA already have backtracked out of this hiking policy. So it's even I would say right now not going in tandem with Federal Reserve, but it's still at 4.1 and it's far from lowering interest rates and cutting them. On Wednesday we have consumer confidence of Switzerland, and right after, on Thursday, we have Bank of England interest rate decision. That's yet also important to watch. On Friday we have unemployment rate, and also very important as a Fed's very important watched indicator, non-farm payrolls, to find out what will bring over. The previous one was 2.09k. Right now the forecast is 190, so it's about to get dropped. But it's what the market expects for a very long time, is that the non-farm payrolls will eventually show some cracks within a system. Right now it's not that obvious. However, the previous one data has shown that we are right now at the tendency lowering and sliding towards this lower 200s. And if we get cross through this 200 barrier from the upside, it would mean that the Fed will start to think over the possible next interest rate hike in September. So as we are covering up and wrapping up our episode, at the end, as always, we are studying the trade idea, and there is a one of the financial asset class that have a opportunity to move in one of the direction that I will try to predict for you based on technical patterns and candlesticks formations. So let's look at this time at US 100, so you may take advantage on this. US 100 right now is forming a triple bottom formation, and right here, as we just zoom in, you can find that we have bounced out of this level of 15.42 once, twice, and thrice. So normally when that many types of bounces are taking place on the market, it means that after very strong rebound right after, we are finding a possible rebound phase of the one area that is maybe diverged with a congestion zone, the closest congestion zone, and that's the one that may get us to 0.61.8 on Fibonacci level extension. So the supposedly we may even drop on US 100 to 15.49 before the breakout and before the rebound harder. So if we just draw it right here, we may just jump right there and then start another leg upwards. As we do know, on US 100 we are not very far away from reaching new highs. That's why this August supposedly will be the one that may close us even higher to this previous highs of 1664, even up to 1678. So US 100 right now is on the path to move upwards. Then next, as I said, congestion zone that I do expect this US 100 index to rebound is at this level of 15.54. So taking all of this, I do expect that this type of trade with a stop loss right below previous lows and with a take profit at least at the higher boundary of this liquidity zone is the one that maybe the one to take the risk on, and the one that I may set my orders at 15.58. So that's the area of my interest right here. I do really like that we are still holding above this 200 EMA, and also we are still slightly touching this 50ish EMA. That's why on the 4-hour chart we are still very strong and sturdy. So always remember about risk reward being at your favor. That's why I would even increase this type of target to the highs of 2021 in order to hold it even right after with a risk reward profile at 3.6. It's absolutely the one of a worth taking a bet. But always remember of being cautious and don't lose more than you afford to lose. So don't risk, I would say, more than you afford to lose. So about risk management, we've talked a lot back in previous episodes, so if you haven't watched, you may watch it right now. So if you've enjoyed, you may share it or like it or subscribe to the channel, and it will be highly appreciated. Thank you very much for sticking around, and we are seeing each other tomorrow at at 8 a.m. ET time. So thank you very much, and